Hello and welcome to the Crypto Jungle. My name is Baloo the Bear, and here on the channel we keep crypto simple. We look at the price, we look at the fundamentals, and we try to determine if something is worth trading or not. And in this environment, things have not been too tradable. It's certainly not to the long side anyways, but we've been killing it in the jungle with the shorts. In today's video, I want to take a look at Bitcoin. I want to take a look at some major altcoins, and then take a look at the indices. The American indices are kind of the leader of the show right now. They are controlling most of what's going on in the markets, and crypto is not immune to that. So we are highly correlated with traditional finance, so we're going to be looking at them good old American indices. So without any further ado, let's just go ahead and jump right into the king of all crypto, that is Bitcoin. So taking a look at Bitcoin on the weekly excuse me, we have another red candle. So everybody, I've been noticing this narrative out in crypto Twitter and in YouTube saying, hey guys, we've had 7 red candles in a week, 7 weekly red candles. We're going to have a bounce candle. That's pretty illogical in my opinion. When you are in a downtrend, you have the ability to print red candles. We can't overcomplicate it. It's like going to a roulette table and saying, hey, I hit red 7 times in a row. Next one's definitely going to be black. It doesn't really work like that. But taking a look here, we're almost in my pocket of liquidity that I am interested in becoming a buyer, my little honey hole down here. This is the area of interest for me, anywhere between $12,000 to $20,000, just a wick below this 200-week moving average. You can see that in bear market bottoms here, we do come down and touch this area, sometimes wicking below. You can see in the COVID shakeout, we got about a 15% or maybe even more move to the downside. We came down here, wicked below it, anywhere from 15 to 30% has the potential to wick below. So that would be, up here in my kind of area of the honey hole of what I'm looking for. Excuse me. Throat's a little clogged this morning. Good morning if it's morning. Good afternoon if it's afternoon. And good evening if it's evening. Got water and coffee on the go. All right. So, we got Bitcoin on the macro there. Let's go ahead and take a look at Bitcoin on the short term. So this is kind of this is what I'm in already. Shout out to the VIPs who got into this short. We're basically looking at redistribution schematic number 4. So for those who are new to the Wyckoff method, you'll see it floating around from time to time in crypto Twitter. You'll see people saying, hey, we got a Wyckoff accumulation. Hey, we got a Wyckoff distribution. The Wyckoff method, it's a little more nuanced than that. And although there are blueprints of what you can expect to see, ultimately it's a roadmap. You shouldn't be like super focused on this point has to go here and it has to be above this high. It doesn't really work like that. It's a lot more interpretive. Basically, you're looking for just a generalized structure inside of a consolidation. The Wyckoff method is all about just looking at the consolidation itself, the sideways trading environment, and looking at the characteristics inside of that consolidation to look for clues towards if it is a distribution or accumulation. So there are schematics, little blueprints that you can look at that can kind of help you. And if you hop into the Discord server, links below, we do have a free resource for you to go and check that out in the resource tabs. Go to the diagrams, and here we have a redistribution schematic diagram right here. So we got 1, 2, 3, 4 here. 4 has a few key characteristics, and that's what we're going to dive into in the small time frame analysis in just a moment. But I just want to go over the key characteristics of what makes a redistribution schematic number 4. First key characteristic is a large shakeout with a bounce. Okay, so large shakeout with a bounce. That bounce results in a sideways trading range that is above the shakeout. So it's kind of like 2 different areas. You come down to the shakeout, then you come back up, you bounce up, it was an overcorrection, and then you start to trade sideways on top of that shakeout. So we've got 1, 2, 3, 4 touch points setting the range of that, and then you have a weak low volume curling over into the eventual downside move of this Wyckoff redistribution schematic number 4. So if we go ahead and take a look at the Bitcoin price action, you can see that we have a large shakeout. We begin to trade sideways above the shakeout. We have 1, 2, 3, 4 touches, and then we have a rally that's unable to reach the top of the trading range and a folding over. Now, Bitcoin is really volatile right now. The order books are really, really thin. I'm sure some of you have seen a lot of the liquid supply leaving exchanges. A lot of people have been spinning that into a bullish narrative, saying that, hey, there's a lot of supply leaving exchanges. We can have large price advance. But when you don't have a substantial liquid supply on the exchange, basically you just have a thin order book. Now, a thin order book can move the price up or down. When you have a thin order book, it's just very easy to move the price. So yes, in theory, if the market was bullish, you would see, crypto going to the moon with thin order books on the exchange. But we're in a bear market, and it's a very relentless bear market. So having less of a liquid supply on exchange in the context of a bear market just means further downside. So we are short this move right now. But yeah, going back to the liquid supply of the order book, we do have a potential to kind of rally up to the underside of this consolidation. If I just pull up my rectangle tool right here, so there is the possibility for us to kind of come down or come up rather to the underside of the previous consolidation that we just had a breakdown from. Neil Fleming, good evening. Kahuna, aloha. Tushi, short 'em all. Colorado Sports Dude, hi all in blue, hope all is well. All is well, my friend, all is well. Yeah, so do be on the lookout for that. If I did see the price action come to the underside of this, coupled with low volume and bearish divergences on the RSI, that to me is going to be a shorting opportunity. And that call out will be occurring in real time in the private group. We do have a promotion going on. This is one of the biggest sales I've ever done for the private group. So we've done some updates to the website. We have 2 new packages. We basically have a quarterly package and a biannual package. So those are 2 new pricing options for you to take advantage of. And since you guys are here in the bear market, the bear market is where all of the true alpha and where all of the true advantages of cryptocurrency come from. You should be rewarded. So we have a coupon code called BEAR. It's going to give you 25% off your next 2 payments, regardless of the package that you choose. That means if you choose the monthly package, you will get 2 months of 25% off. But if you choose the yearly package, you will get 2 years of 25% off. So if that is something that interests you, go ahead and check the links below. The coupon code is BEAR. All right, so let's take a look at Ethereum. Or actually, let's take a look at GMT, because this is another one that we're looking at here. Step in, the flavor of the month, the Ponzi of the month. We are looking to short this. I was in a position, got shaken out as in the previous trading session, not yesterday's session, but the session before. The equities were looking a little jittery, and they were at a macro support with bullish divergence. So I did get shaken out of that position. But this is a Ponzi. It's going to zero. It's absolutely going to fucking zero. It's just, how do we get there? How long is it going to take? And, when do we get there? How does a low supply of BTC on exchanges lead to lower spot prices? Because this is a very good question, by the way, and it goes back to how there's a huge misunderstanding with how price is discovered. Price up does not mean money go in. Price down does not mean money come out. Price is decided by the order book. So the order book is sitting on the exchange. You'll have a stack of limit orders that are on the order book. And then when an individual comes in and does a market order, whether it is a market buy or a market sell, the market orders move the price. What that means when the liquidity is very low, I could actually take $1,000 and do a sell on Bitcoin, and I can move the price $5,000 if there's not a lot of liquid supply on the order book. So the less supply, the easier it is to move the price, because the less supply is on the exchange, that means there's less orders on the order book, so that if anybody comes in and does a market order, it's so fucking easy to move the price up and down. And since we're in a bear market, it's easy to push the price down. Really good question. You don't buy BTC with BTC. Futures would be different, obviously, because you can go short with BTC. I mean, if there's less, it's all about the order book. So if people don't have limit orders on the Bitcoin order book and somebody comes in and sells their Bitcoin at a market, it's gonna blast through all of the orders. So what's Bitcoin at? What's the Bitcoin price at? Is it 29? So if the order is 29.1, 29.2, or sorry, 29.1, 29, 28.9, 20, they can just blast through those orders. If you fill your $1,000, you can actually end up at a much lower price. You can end up $5,000 price lower, even though you only sold $1,000. Clown Pepe XX back. All right, so let's take a look at another one that I think is a little bit overheated. We didn't really cover GMT here, but we're looking at the same sort of structure. So we have this large shakeout, 1, 2, 3, 4 touches, and a weak curling over. So what I would be looking for is a break down below this level. Where's my my pen tool? So I'd be looking for a breakdown below this level, get a bearish test, and then a continuation back down to at least where the bottom of this shakeout is back here. Excuse me. So yeah, that's GMT. Let's take a look at KNC. KNC has been on a really large rally, just out of nowhere. Big rally in KNC. Looks like we're reaching a local top. You can see a bearish divergence forming in the RSI up against a local resistance point. If we do get another rally up to this level, I would be looking to short that. I did try and short it yesterday, got stopped out. Looking to short it again because it's definitely looking overheated in a bearish market. So what else we got? What else we got? Let's take a look at ETH. Same sort of deal, you know, same story, different chart. Crypto is highly correlated for the most part, so you know we're not going to see too much divergence from these chart patterns. We're looking at the same thing. Redistribution schematic number 4, shakeout 1, 2, 3, 4, curling over. This one's actually looking a little weaker than everything else. So yeah, you know, more downside on the cards. Looking for at least a price of 1,700. My ultimate target for Ethereum is below $1,000 for this bear market cycle bottom, but that decision will be, I will be placing those orders based on Bitcoin's performance. And I think, you know, in the next shakeout, I'm not buying a single fucking altcoin. I'm not buying a single fucking altcoin in the next shakeout because Bitcoin dominance is going to trend to the upside. My target for Bitcoin dominance, we may as well cover that, BTC.D. Let's go to a higher time frame here. Let's go to the daily for this one. Bitcoin dominance, I'm targeting about 60%. So we've got a long ways to rally before we get up to this general range up here. You know, I would be kind of looking at this kind of range up here for a rally. So we're in an accumulation pattern here on Bitcoin dominance. If this goes on a rally, if we start breaking out from this local consolidation and you are 100% exposed to altcoins, you don't have a single Satoshi to your name, holy fuck, are you going to have a bad time. You are going to have a bad time because Bitcoin will rally, your altcoin won't. Bitcoin will crash, your altcoin will crash. It's not pretty, okay? I've been around the blockchain. I know how these fucking market cycles work. And this is not what you want to see. This is not the play. But, you know, this is what happens. If this is your first cycle, I want to let you know The first cycle, it's going to be a wash. You have to be a very lucky and already kind of savvy investor slash trader to be able to walk away from the crypto market successful during your first cycle. But if you're new to trading, if you are new to investing, and this is your first crypto bull market cycle, don't feel so bad that your portfolio is trading to zero. It's just what happens. So it usually takes 2 or 3 cycles. A lot of people can nail it down by the second cycle. By the time you get to the third cycle, you're killing it. You're making it rain money. So, hang in there. But yeah, as the shakeout occurs in Bitcoin, this will begin to trend up. And as it trends up, we're going to encounter that resistance at around 60% dominance, I'm anticipating. And there's not a single altcoin under the sun that's going to be performing against Bitcoin in that context. So when the shakeout occurs, I'm buying Bitcoin, only Bitcoin. Don't care what you say, just fucking Bitcoin. When we start to go through an accumulation and Bitcoin begins to break out for a long-term rally, then I will be allocating to some of the safer altcoins like Ethereum, potentially even Cardano. I've been a long-term Cardano bear, but the only reason I've been a Cardano bear is because Cardano has been overvalued. If we can get to the point where we are undervalued or fairly valued, I would be willing to take some of those trades. Sorry to press, I do get what you're saying about liquidity. If there was no stables or USD on exchanges, I'd see how that would be bearish. but no BTC means no selling pressure. Maybe I'm wrong. So the liquidity on exchange is not set in stone, right? You, at any point, if you decide to sell your Bitcoin, it doesn't necessarily have to be on the exchange. So if you capitulate, you're like, fuck, I'm done, I'm out. I'm going to take my Bitcoin off of my ledger, I'm going to transfer it over to the exchange, and I'm going to sell it. And that process is like, what, 10 minutes? 10 minutes for somebody that doesn't really know what they're doing, and a lot faster for somebody who's, has a lot of crypto transactions under their belt. So the liquidity sitting on the exchange is in the order books, getting ready to fill. The market makers have their orders. And when I give up, I just transfer it to the exchange, sell it. So if I take my Bitcoin and sell it for dollars on the exchange, it goes down. And don't feel bad about asking questions. This community is very, very supportive. We don't believe in dumb questions. The dumb questions are the ones that you don't ask. And this is a good opportunity to talk about the group. We do have a free side of the group. We are happy to answer questions. Come into the Discord. If you're new to Discord and you're in crypto, what are you doing? You got to get in Discord if you are in crypto. Come into the Discord and ask these types of questions. I live stream twice a week, do videos when I batch some videos. But yeah, I live stream twice a week, but that Discord is 24/7, man. If you have support questions that you are looking for, if you have those dumb questions, there are no dumb questions. Come into our server. We are happy to answer questions. All right, so Bitcoin dominance targeted at about 60%. Let's take a look at traditional finance. Oh. My iPad's crapping out on me. Second monitor's crapping out on me. Uh-oh. Shit. I just did an update. And during the update, what they did is they made my iPad not work. Thank you, Apple. Love it. All right, let's see if I can rectify this situation live. It's a little buggy. Hang in there, folks. Let's see if we can do this with a nice classic music of me being down. Technical difficulties. Where's my technical difficulties? There it is. And we're back. And we're back. All right, so where was I? Yes, we were going to take a look at the equities market. So yeah, 60% my target for Bitcoin dominance. Once we get there, start getting a turnaround, then we can start seeing performance in the altcoins. But the key master of all of this is the equities markets. And the equities markets look like shit. We've been talking about this for fucking months. If you've been a subscriber to the channel and I've helped you, save your portfolio or allocate in an appropriate way, then I'm glad, because that's my goal here. I'm trying to help as many people as possible. There's a ton of noise in the space. Everybody has an opinion and they all suck. Everybody's a moon boy that just gets into the market and decides to start a crypto YouTube channel. Mark my words, you're going to start to see it. Fucking YouTubers are going to start dropping like flies. They are going to start dropping like flies. Why? Because the information that they had to provide was only applicable for 10% of the market cycle. So if you are new here and you're looking for a YouTuber that only talks truth, even when it's not well received and not necessarily what people want to hear, then subscribe to the channel. And if you want a YouTuber that's not going to go away, I'm not going to go away. I have no reason to go away. I've been saying the same thing cycle to cycle. I was there at the beginning of the bull market telling you when to buy. I was there at the end of the bull market telling you when to sell. Didn't quite nail the dead cat bounce. Admittedly, that one was a bit of a trap for most people. But, cycle to cycle, you're always going to learn things. So watch, man. You're going to start seeing crypto YouTubers dropping like flies. False profits. All right, taking a look at the S&P. We've had this distribution schematic marked for weeks now. 1, 2, 3, 4, 5, 6, like 12 weeks, a long time. 3 months we've been talking about this distribution in the S&P. Our target is down here at around 21 on the E-mini futures. So still downside in the equities markets. Taking a look at the Dow. Similar story, different chart. Dow's holding up better than any other indices because it has commodities in it, and commodities are in high demand. They are less speculative, but same thing. We've got some room to the downside, a lot less room, I guess about 5-6% down in the Dow before we reach the kind of support range I'm looking at. NASDAQ, this is our highest correlated index, our highest correlated American index. We've got room down to about 20% further. Doesn't have to happen. We do have a green diamond flashing on the weekly here for our alphanumerics indicator. Typically speaking, when you get green diamonds, you're close to a bottom. Here it nailed the bottom. We don't know if it nailed the bottom here. It nailed the bottom back here, and there was 2 here. So we could be in one of these types of situations where it flashes, rallies, dumps again, and then flashes a second time, and then we go into an accumulation rally. It's not a melt your face off rally, just a sideways accumulation. But this is looking like a hypercycle. Look at this price structure. Look at this price structure. This is a hypercycle. That is concerning. This right here, when we look at this structure, that the NASDAQ has been on a hyperwave. Why this is concerning is because when a hyperwave concludes, we see an 80 to 90% drawdown. 80 to 90% in the NASDAQ would be full-blown fucking recession. And likely, if there's a currency crisis, we're looking at a depression. Now, I'm not the type to really, kind of look too far in the future when it comes to analysis. You got to take things level by level. But when we look at kind of the fundamentals of a hyperwave, we've got some fucking gnarly targets here. We've got some really, really gnarly targets. So an 80% correction. Honestly, I think we might even come back down to 85% down here. If this is a hyperwave. If this is a hyperwave that gives all the profits back. And this is, I want to be very clear. This is a very bearish scenario that I'm talking about. And it's everything in analysis is about possibilities and probabilities. Is it possible that we bounce from here? Yes. Is it more probable than an 85% retracement? Yes. Is an 85% retracement possible? Yes. Okay. It's one of the less probable, but given the context of a hyperwave, this is how these go down. Our next kind of support down in that general range is going to be back here. Ugly, ugly, ugly. If this ends up being true, ugly. This is going to be devastating for the world economy. This is going to be not a pretty picture. This is kind of collect some fucking tin cans of tuna here. It's not a good situation. But you know, there's still trades to be made. When we get an oversold correction, there's typically a bounce. Nothing goes straight up, nothing goes straight down. But yeah, we could start to see some incredibly bearish narratives begin to enter the equities markets if this type of hyperwave, you know, plays out. What are the characteristics of a hyperwave, by the way? It's an accumulation that starts off at kind of a 30 to 45. Then you have a secondary phase where where it increases. So it's a trading range that's low in its incline. Then you have an acceleration, and then you have a blow off top scenario. So it's like a fucking crypto chart, guys. This looks like a crypto chart. And then we have a break of that. And how these typically play out is you get some sort of action like this, and they're relentless, brutal. And then we flatline and go into a multi-year accumulation. Multi-year. This could take a fucking decade. This could take a decade to play out. Bullish news. How can we spin this? Do we want to spin this? This could, crypto fundamentally is very different. It's fundamentally quite different from the equities markets. It's fundamentally quite different from the commodities markets. And in the context of a really large flush in the equities markets, if we get to the point where demand does kind of stabilize in the crypto markets, that's kind of your best case scenario for a potential decoupling. So we talk about this from time to time. Some people front run that idea and get a little too ahead of themselves, but they talk about the equities or crypto decoupling from traditional finance. The only way that crypto is going to decouple is if people start searching for places to put money and they land on putting their money in cryptocurrency. Now, that's a big if. That's a big if. Like you and I, we get it. We understand crypto. We know that this is an extremely important technological advancement to the internet. Basically, the internet was not finished until we have cryptocurrency, and now we have the ability to finish the internet. But do people get it? No, it's going to take some time. So we may be looking at kind of the conclusion of a dot-com-like cycle. Obviously, there was winners in the dot-com. The all-time high of Amazon during the dot-com bubble was many multiples lower than what its value is today. But yeah, it's not good. It's not good. So being an investor in these types of conditions is going to be very, very difficult. So understand that. You need to have a level head. If you joined crypto during 2020, 2021, you are probably not really mentally prepared to be able to handle what's potentially coming. And I mean that in the best way possible. I just think that being an investor, an unsophisticated investor, meaning that you've been actively trading for less than 5 or 6 years, you're going to have a really hard time to capture value in the market. Buying the dip will never fucking work. It will not work for potentially 10 more years. Buying the dip was a very fantastic strategy through this whole hyperwave. But buying the dip could potentially not work for a very, very long time. So you do need to learn how to trade the short term. This is what we teach in the jungle. We don't try and 100x a fucking altcoin. Just try and get 30%. 30% is incredible. 30% is incredible. If you can get 10%, compound 10% on top of 10% on top of 10%, you can trade any market, any time of day, regardless. Period. End of story. You can extract value from the market when it's sideways, bullish, or bearish. We're entering a trader's market. We are entering a trader's market. If you are not a trader, get the fuck out. And that sounds really, really harsh, but this is just the way I see it. And not a lot of people are talking about these types of potentials. And when they don't talk about things that I think are, glaringly obvious, you're running some big risks. Investments, fuck, man. Let's just look at the dollar. Where do you think the best investment right now is? For God's sakes, the best investment is fucking US dollars. The dollar's rallying and getting ready to break out. If we continue this trend, if we consolidate and then break out higher, you need to invest in the dollar. And yeah, I hear what you're saying. The dollar's inflating to nothing, but it's inflating to nothing at a rate that's slower than every other asset in the world falling. We can probably look at oil and stuff like that, but ultimately, if you're looking at a safe haven, the safe haven isn't fucking Bitcoin. The safe haven isn't the S&P 500. The safe haven is cash. Even though they're robbing you through inflation, the hidden tax, they're taking money away from you. They're taking purchasing power away from you. There's literally nowhere else to go. So it's the lesser of all evils. Not a popular opinion, but hey. Hard forking in the chat. How's it going, Sean? Welcome in. Fellow doomsdayer. Where was I? That was a big sidetrack. So Tesla. Let's take a look at Tesla. If we are entering this kind of hyperwave conclusion, I mean, look at Tesla, guys. Look at Tesla. This is a fucking altcoin. This is an altcoin. Like, we're heading back down to here. This is where Tesla's going. $80, $70. Get your puts in. Get your year-long puts. Thank me later. Tesla, I mean, we might fucking rally for some bullshit head and shoulders, but we might not. A lot of the market has been relentlessly down only. If we take a look at Bitcoin, let's go longer time frame Bitcoin here. This downtrend has been relentless. It's been very, very difficult to try and, change your bias and exit gracefully. A lot of us got trapped here. So this was the top. This was a dead cat bounce. Now this dead cat bounce formed a new all-time high, but because it was a dead cat bounce, when we finally got out, relentless downside. There was no relief rally. There was no opportunity for the moment where you were like, okay, I think we're actually in a bear market. There was no opportunity for a bounce and you to exit. So you need to look at what the market is telling you. And the market is telling you people are bailing. They're bailing hard. They're bailing fast. Man, this is a bearish stream. I didn't think it would be this bearish. But let's talk about something bullish. What the fuck's going on with Tron? Tron's been on my radar. Don't know exactly what's going on with Tron, but Tron's been quite resilient in a lot of the market action that we've seen lately. They are introducing USDD. Now, this is an algorithmic stablecoin. I think there's a spot open for an algorithmic stablecoin in the cryptocurrency markets. I can't remember which one just traded to zero. Oh, yeah, fucking UST just traded to zero. So, hey, there's a spot open. And the degens will want to be degens again. They are going to be burning a lot of Tron to peg the USDD, the decentralized US dollar. But it is an algorithmic stablecoin nonetheless, so please proceed with caution, and nothing here is financial advice. But we've had capitulations. We've had market-wide capitulations, and Tron has been unaffected. That is strange to me. So keep an eye on Tron. I don't know much about this ecosystem at all. This is a crypto OG from 26. It was one of the ICOs, from 2016, 2017. And they are a good blockchain. They do have a lot of development, but they don't have a lot of adoption. There's not a lot of people using Tron from what I can see in my anecdotal evidence of analyzing the market. We don't see a ton. But there's some pretty unavoidable, like this was the capitulation right here. Look at this, okay? The market fucking capitulated when Luna traded to zero. And Tron formed a higher low. with a ton of volume. There are market makers defending the price here. So I'm going to be keeping a very close eye on Tron. Haven't seen anything really trade worthy yet, but we're getting close to something. It's one of the anomalies. You're always going to be able to find anomalies in the charts when you're on like the back pages of CoinGecko, when you're really fucking far down in shitcoin land in Goblin Town. But Tron is not a shitcoin. Tron is a front page coin, and it's not capitulating. So very, very interesting, something I'm keeping a very close eye on, and I think that you should as well. So is gold another safe position? Hard to say. You know, in the context of a market-wide meltdown, I don't think anything is really safe. It's just a matter of what's going to suck the least. And when I look at the charts, when I look at the analysis, let's take a look at gold real quick. Oops, keep opening GMT tabs. Let's take a look at gold. No, not Mexican gold. Give me the US dollar price. And let's zoom out to the daily. Let's get a zoomed out approach here. So this is not what you typically want to see. Now, up until this point, let's actually rewind it here. Let's do a replay. I gotta watch the time. I'm almost out of time here. Now, up until this point, gold was looking fantastic. Beautiful, beautiful accumulation range. We let it play out. That accumulation range also played out, and we began to rally. But here's the thing. We reached an all-time high, and we rejected to a new low. That's not, well, it's not quite a new low yet, actually, but we are below that support line. So people, you know, investors aren't convinced about gold either. We're holding it. We're holding it. So that's good. As long as we can hold this level, then gold could absolutely be a hedge. If gold can hold this level, we can be a hedge. And if gold can break out, then gold will be a safe haven, and gold will probably be a better place to be than cash. And that's a narrative that's very familiar with a lot of people. Okay, that's a narrative that's very familiar with traditional finance. My only concern is just the severity of the potential downside here if we go into kind of a dollar milkshake type situation where there's a large debt unwinding. You know, the world is very leveraged with debt. If we have some sort of unwinding event, I don't see any asset doing well. I see real estate falling. I see gold falling. I see oil falling because people stop driving because they can't afford to fucking drive anymore. It can get really, you know, uncomfortable. But that being said, if gold can maintain above this area of support, that is a positive sign. If gold can rally above this area of resistance, now we have the narrative for a hedge. Absolutely. We have the narrative for a hedge. So keep an eye on gold as well, because it could end up being a better safe haven for your value than dollars. Is Bitcoin going to be it? No, it's not. Bitcoin's not the safe haven. Get that narrative out of your head. It's just not. The world's not ready. One day, possibly, not today. All right, that is pretty much all the time I have for today. If you guys enjoyed this content, please leave it a like. Don't forget to subscribe. I'm sorry. I hope I didn't scare you guys too much. A little bit of, I'm not trying to fear, okay? FUD. I'm not trying to FUD. I don't want you to be scared. I don't want you to be uncertain. And I don't want you to have doubt. I want you to have clarity. That's what I want. I'm not a FUDder, okay? I'm trying to be as objective to what I'm seeing in the charts as possible. And I think it's very important for all of us to just take a step back and look at what's going on in the world. Okay, and we need to look at other markets. We need to get out of our little micro bubbles, and we need to take a zoomed out approach to the markets overall, because it's the global total market that is kind of sketchy right now. So please understand that I'm not trying to scare you guys out of positions. I'm not trying to, you know, sway your decisions either way. I just want to encourage you to do just that. Zoom out, take a look, analyze through your own lens, and be truly objective and ask the hard questions. What happens if this is right? What happens if we are exiting a hyperwave of the S&P? What does that look like? What happens if a lot of companies go bankrupt? Large companies that have a lot of, employees that they have to lay off. What does that look like? What is the context of a recession? Surprised you don't short. JM, I do short. I don't short a bull market. Okay. When I'm in a bear market, I do short. So I have been shorting. I mean, I'm up significantly on my Bitcoin trade thus far, up significantly on shorting some altcoins. I fucking called the short on Luna, didn't short Luna because I just couldn't get a clean entry and watched it fucking trade to zero. But yes, we do short in the jungle. If you are not an American citizen and you have access to those derivatives, I guess even the UK has restricted access these days as well. If you have access to the derivatives and you're looking for a group to train you on how to short, join the crypto jungle. We're shorting up a storm down there. I am scared. Yo. I'm sorry. Just don't allow your fear to steer your decisions. If you're scared now, take a time out. Take a time out, think about things, come up with a plan. If you're struggling to know what to do, hop into the free side of the Discord and we can talk. You can see what the other guys are doing. If you want to learn how to trade in all market conditions, then sign up for VIP. The group pays for itself. And there's a 25% discount right now with the coupon code BEAR. All right, that is all the time I have for today. If you enjoyed the content, please leave it a like. Don't forget to subscribe. And if there are any coins or projects or things that you thought I missed, please leave them in the comments section down below. And until next time, please trade safe. It is a jungle out there. Peace.